Well, markets begin the week reacting to Donald Trump's proposed 15% global tariff. Initially, it was 10, quickly raised to 15, a broad-based trade shift that could reprice inflation expectations across asset classes. Unlike targeted duties, this move now impacts a wide range of imported goods, raising concerns over input costs, corporate margins and consumer prices. Investors will be watching Treasury yields, the dollar and equity volatility for signs that inflation risk is being repriced. At the same time, geopolitical tensions between the United States and Iran remain elevated, keeping crude oil markets on edge. Tuesday brings February consumer confidence data, a key gauge of household sentiment amid rising trade uncertainty. If confidence weakens, it could signal slower discretionary spending ahead and raise concerns about economic momentum. Thursday's initial jobless claims will offer a real-time snapshot of labor market strength. Claims remain historically low, but any sustained rise would suggest cooling employment conditions. Together, these reports will test the resilience narrative that has supported equities despite higher rates and global uncertainty. A weakening consumer and softer labor data would reinforce growth slowdown fears. Wednesday's earnings from NVIDIA are likely the week's most important corporate catalyst. As a major index heavyweight and AI bellwether, NVIDIA's data center revenue growth, margins and forward guidance could drive broader Nasdaq volatility. On Friday, January's producer price index data will provide insight into upstream inflation pressures. If tariffs begin feeding into producer costs, markets may quickly price in renewed rate concerns. Adding to the mix are 11 Federal Reserve speaker events this week. Officials are expected to address tariff-related inflation risks and the path forward for policy.